Hello, my name is Aaron Vang with Fairway Independent Mortgage Company. Welcome to our first-time buyer webinar. Buying a home is a lot easier than you've heard and you think. In this webinar, we're going to be teaching you how to build your equity instead of your landlord's. One of the things we want to make sure that you're aware of, this class is completely free. And if you need more information on it, please click the link below. But for now, let's jump into this. Did you know that rent adds up a lot over time? The chart below demonstrates how much rent payments could add up over the years, which is the money that you could be investing in a home of your own. Let's just take an average of $1,600 a month. You can see in that 2 years, you're at $38,400. 5 years is $96,000. 10 years, $192,000. And finally, if you're renting for 15 years, you're at $288,000. Some of the right questions that you'll want to ask when going through this process. What are you trying to accomplish with your housing situation? What is better, buy a home now versus renting a home? How can I make sure this fits into my short-term and long-term budget? How will this financial decision impact the areas of my life, my marriage, my children, college funds, and care of elderly parents? What mortgage and home buying strategies will result in less overall financial risk? And keep in mind, if you're interested in getting started today, click the link below. Renting basically earns you nothing. Investing your money into a mortgage helps you build equity and wealth for you and your family. 10 years of $1,000 a month in rent is $120,000, estimated $0 when you move. 10 years of $1,000 a month in mortgage equals the same amount, an estimated of $50,000 to walk away with you when you do sell your house. Right there in that slide alone has told you this is a great thing that you should be doing. Why rent when you can own? You're still renting because you don't think you can afford a home? The monthly mortgage payment could be less than your monthly rent. Here you'll see some rent per month and the cost of home. But let's go to the $1,600 a month payment that I was showing you before. $1,600 a month might be able to buy you a $255,000 home. Benefits to owning your own home instead of renting. Financial health and wealth, which is important to you and your family. Equity in your home, which we showed you on the previous slides. The possibility of qualifying for federal tax deductions. The ability to increase your home's value with renovations or upgrades. Achieving the American dream of you owning your own home. 5 biggest myths to prevent people from buying a home. I need perfect credit. Not true. You need 20% down. Absolutely not true. As a matter of fact, security deposits that you would use for your rent can be used to buy a home with even less than you would put down for a security deposit. You're worried that you won't qualify. But here's the thing. If you don't think you can qualify, this is a great time to stop right here, click the link below, and get a good game plan that we can put together for you. Because right now, you don't know if you don't qualify. If you don't know, you don't know. Number 4, can't afford the monthly payment increase. And number 5, home repairs are too expensive. Things to know before you buy a home. How much can you afford? Some of the things that we'll cover in this slide, we'll talk a little bit about the qualifying information. Again, what you don't know, you don't know. If you click the link below, again, it's free. We'll get you on a path and get you all that information that you need to get your home ownership started. Factor into your financials are your debt to income ratio, what assets you might have, what debts you carry, what your credit is, and what your affordability is. What is a credit score? This is a great one. Do you know? Have you checked online? Here's the thing. Some of the things that you check online are not going to be that accurate. For the best thing to do in your free webinar today, click the link below and get an accurate estimate of what your credit is. Here are some of the scores that we can look at if you don't know what a credit score is or where they are located or where they're at in the consensus. You can see that 300 to 599 would be classified as poor, but I'll also let you know at 580 that you can buy a home. Although that looks like it might be poor, we can actually get you a home at 580. These are some of these scores that you can see when you be doing your credit scores or pulling that information for your mortgage. So let's talk a little bit about the credit score. There's some big chunks and things that we can look at. Mostly, you'll see that 35% of your credit score is your payment history. Have you paid on time? 30% is how much you owe. For example, you have a credit card that has a $1,000 balance and you have $300 on it. You're at 30% capacity. Credit length, how long have you owned it? And new credit, how much have you pulled? How many times? How many credit cards are you adding? How many car loans? And of course, credit types, being car loans, lines of credit, and credit cards, things of that. The more credit types you have, you can see that 10% of the score, but your biggest portions of your score is going to be your payment history and your amount owed. the home financing process. Step one is the initial consultation. And again, if you're ready to do that and would like more information, this is completely free to you. Click the link below and we'll get you set up and started today. Number two, once that's done, takes you 5-10 minutes tops, we'll get you the pre-qualification. Number three is the processing. Number four is the underwriting. Number five is the pre-closing. And then number six is closing. And you're saying, what does all that mean? Well, let's jump in and take a look. Step one is your initial consultation. The initial consultation covers how long you plan on living in your home. How much down payment, if you have any, will you need? Or will you need down payment assistance? How much do you want your monthly payment to be? Step two is the pre-qualification process. Getting pre-qualified simply is home buying process from the start. Helps you determine how much home you can afford before you start shopping for homes, and we get you out with a real estate partner and look at those homes. This pre-qualification process also lets the seller know that you are serious in buying that home. In order for you to start the application, which again, you can click the link below and get started today, here are some of the things that you're gonna need. W-2s, pay stubs, employment history, checking and savings, most recent 401ks if you've had it, your tax returns. Now, just so you know, during this process, when you do the initial qualification, you can click the link below and get that started, and we can get all this stuff after our initial consultation. So don't let any of this stuff bog you down by getting ready to purchase a home. Where you've been living for the last couple of years, if you had a mortgage in the last couple of years, copy of your driver's license, passport, or identification, and that will be it. We'll scratch that one because we don't use those. Additional things, if you're a veteran during this process, we're happy to help you. We love our vets. You will need a DD-214 and some additional documentation if you're self-employed. Most recent corporate tax return, year-to-date profit and loss, current business license, and 1099s. Again, if you'd like to get ready, you can click the link below and we can gather this stuff after the fact. Number three is processing. After you completed the loan application, those things that we've talked about, your loan will be submitted to a loan processor. The processor will basically review the information that you and I have talked about, and then I'll also order the property's appraisal to make sure that you're paying exactly the amount that you need to be paying on the home. Depending on your situation, the processor may ask for additional documentation. There's some different things that you might need that we didn't cover. Once your loan file is completed, the processor then submits it to our next step, which is underwriting. The underwriter is a part of this crew that actually goes back, takes my information, your information, the processor's information to make sure that we're all accurate, and goes and reviews the loan to ensure that all the guidelines for our financing are met and there's no additional issues that would come up in the future. Once your mortgage has been approved and cleared, your loan is given a clear to close, and that's on our way to step number five. Step number five is going to just review all the information that we talked about. What's your interest rate? How much is your loan amount? What's the term? The term being 30 years, 15 years, 20 years. This number three bullet, relatively easy. Let's say we started in June and we now found something in July. We would need July's pay stubs. So it's very, very simple. Once that's done, ta-da, like I said, super easy. Step number six, you will sign your documents. You will need a photo ID and any copies of the form of down payment that you'll need for the purchase of your home will be done that day. 6 steps. Super easy. First part being the initial application, takes you 5 to 10 minutes. Click the link below. Again, our priority, number one priority, is to help you and your loved ones get into a home. If you'd like to get started, it is completely free and you can click that link below. I'm going to cover now some do's and don'ts when applying for a mortgage that you might not be aware of. Number one is keep the originals so you'll be able to access your employer's bank's websites, your pay stubs, your bank statements, and all that important financial information. What I tell people is you want to either start a file, electronic file, keep it all in there, or keep it in a file at home so that if we need to reference it in the future, you know exactly where it is. Provide earnest money deposits, personal bank accounts, gift funds. Those are some of the things that we can cover during your consultation. We do allow gifts. You can actually get money from family members to purchase a home that you probably weren't aware of. Big important piece is that when we're doing this process, you want to keep the lines of communication open with me. You have to notify us if anything changes. That's very important. If your employment changes, if you recently had a raise or a promotion, or if you had to take some time off for being sick, we want to know all those things. Also, be aware that if any credit pulls come up, we're going to be aware of that. It goes back to when we talked about opening up new accounts. Notify us first. Let us know, and then we can make sure it doesn't hurt you in any way. And again, with the do's and don'ts, don't close or open any asset accounts and transfer funds between those accounts. Those are some of the things we'll cover during your consultation as well. You don't want to be moving money around. Underwriters will look at that and wonder where everything comes from. Major stress. Leave everything the way it is. Like we said, it's 30 days. Just keep things the way they are. Once you're done, you can go about your business. Don't deposit any monies that are outside your payroll deposits. If they are, you want to inform us and let us know what they are. Don't change jobs or employers. If you do change jobs, if it's the same line of work, you'd be fine. If you go to a different employer, that's also fine. Don't make major purchases. Goes back to talking about buying trucks, doing contracts, purchasing furniture. Stay even keel for 30 days. Once your house is set, you can go and get those things. Don't open and increase any liabilities or any of the things that might show up on your credit report. Goes back to the information we talked about on your credit. Here are some loan programs, and these are just 5 of the loan programs that are available. And what we'll do during the consultation is we'll figure out which one of these and many others that could be available to you. And by doing that during the consultation, if you click the link below, we can get that started and know which one of these works best for you. All right, guys, we've covered a lot of information. Again, if any of those things have triggered something for you, again, we just want to make sure that we get you and your family into a home and make sure your loved ones are taken care of. You can click the free link below and get that process started today. Some of the tips that we have for you on the home buying tips are: keep your credit current, make all your payments on time, avoid incurring any new debt before applying for your loan. Meet with us to make sure that you know where you're at, how much you can afford, and what the total number is going to be before we get you in touch with one of our referral partners to get you out looking for a house. Once you get pre-qualified, make sure that is done before you shop for your house. Very important. Do not have anyone except your loan officer run your credit history. You're going to be, again, we want to stay in that lane for 30 days, right? We don't want to pull any new credit cards. We don't want to buy any new car payments. We want to buy a house for our family and loved ones and take care of that first. After that time period, if you're in the market for those things, you're ready to go. 7 costly home buying mistakes. We want to cover some of these. Not getting pre-qualified. Again, if you want to get pre-qualified, it's completely free. You're not sure which way to go. You've never even thought about doing this before. That's what we're here for. Completely free. You can click that link below. Lack of organized documentation. Goes back to my folders. Keep all your stuff in one little spot and you won't have any problems. Not consulting with a lender. This whole seminar has been about that, so you know exactly what that is. But not understanding the market is very important. Once you're done with us, that we get you with one of our referral partners so that you can get help with understanding the marketplace. This is all done through this seminar. Again, if you're interested in doing that, you can go ahead and click the link below. Number 5, you can use things like Zillow and Trulia and Realtor.com. Those are great window shopping sites. Once you've met with me and your referral partner, they'll be able to set you up with very specific data that can get you exactly what you need. But if you want to get out and get some juices flowing, these are great places to look, but only look. Number 6, no buyer agency. Goes back to these other things that I've covered about getting a referral partner. Number 7, wandering above your pre-approval limits. Now, very important that these are great window shopping sites, but if you don't have number 6, this one will become very, very challenging. So it's very important once you meet with us, you can meet with them. Maintaining your credit scores. This is a good one to pay attention to. Some of the things that we can help you with monitoring your credit, you can go to annualcreditreport.com. That will help you monitor it. But again, a lot of the online sites that you might be using to use or check your credit are not accurate. Today, for the free webinar, you can click the link below and we can get you an accurate idea of what your credit will look like. Pay all your bills on time or early. Even a 30-day late notice on a small credit card can have a significant negative impact on your scores. Don't co-sign any loans. Their late payments of your co-signer will actually hinder your credit. This is a good one. Don't close old revolving accounts that no longer in use. That actually helps you. If you close it, it'll hinder you. Report any fraud immediately. Number 7, do not extend or open any new credit accounts while in the mortgage application process. Here's some examples why. It's kind of funny and not real funny, but if we buy a truck or get a car loan while you're in the mortgage process, it's possible you could be living in it because you now have hurt your credit score and your debt to income ratios have gone too high. Don't buy your furniture. Don't lease anything. Basically, wait the 30 days, close on your house, have us do that for you, and then you can get those things. But during that process, you want to just leave everything alone. And once you're done, It's only 30 days and you're ready to go. 5 credit myths. Number 1, paying off and closing out credit cards will increase your credit score. Now, paying them off, yes, you get some more points. Closing them goes back to our original slide. That can actually hinder you because then the use of credit is no longer there. Number 2, paying a collection will raise the score immediately. Also not true. The credit bureaus take time to go through and readjust your credit score. It could take days, could take weeks. So it does not happen immediately. Number 3, paying off auto loans or student loans will improve your score. Now, again, kind of back to the credit card situation. You can pay those off and it will show a good use, but then you no longer are showing that that is in use. Opening a new account will hurt your score. Not true. As a matter of fact, when working with some people that might need credit help, we actually help them open up another line so that they can get more credit reference on their credit score. Number 5, having too much credit available hurts your score. Also not true. You have available credit and it actually looks like it's there. You use it from time to time, but you don't abuse it. That will actually help your score. So I'm going to cover some of these a little bit more quickly. Again, if you need them referenced and you want to get more information about it, it is completely free. Click the link below. What is a mortgage? A mortgage consists of, you might hear of PITI. Principal, the original amount you borrowed, interest, obviously the interest rate, taxes on the property, and insurance to insure the home. What is equity? The amount of financial interest in a property. Equity is ownership of an asset that you may have debts or other liabilities attached to them. Equity is measured for the accounting purposes by subtracting the liabilities from the value of the asset. So, an example, we go back to talking about rent, the $1,600 payment, and you have a $255,000 purchase. If you buy that for $255,000, in a few years it goes to $400,000. The difference between what you borrowed and the now new value is the equity that you have in your home. So there, between you paying rent or paying a mortgage, you can see that your money is now building for you instead of not doing anything for you whatsoever. So here are 6 major factors for qualifying for a purchase on a new home. And again, if you'd like to get started, it is free. Click the link below. Qualifying for a mortgage, there are 6, again, major factors. Number 1 is your income, how much money you make per year. The debts that you currently have on your credit. Number 3, what your credit score is. Number 4, your employment history. What do you mean? What is it? Sometimes when people ask me about employment history, well, have you been at the same position or the same job for 2 years? You don't even have to be at the same employer. If you're doing the same line of work, you can still have a 2-year history. For those college kids out there looking to buy their first home, you don't even need a 2-year history of work. If you've been in college and you graduated, you need your college transcripts and then a letter and or a pay stub of your new job, and you can qualify for a home. Number 5, they take a look at the property. What's the property look like? What kind of standings is the property in when you go to purchase it? Last, number 6, your down payment, your closing costs, your prepaids, and your cash reserves and or money that you might have in the bank. But if any of those things interest you, again, this is 100% free, and click the link below to get started today. So as you can see, it is very, very easy. It is a 6-step process, and it's 1, your initial consultation. Again, if you're ready for that, click the link below. We'll give you the pre-qualification and get you exactly the information you need for the home that you want to buy. Get you the home, we process it, the underwriter looks at it, we pre-close and make sure all the numbers are accurate, and you got your home. 6 steps. It's that easy. Buying a home is a lot easier than you thought or you've heard. Through this webinar, we've learned how simple the process can be and that you can get into your next home for less than what your security deposit would be on your rent. Click the link below and get started today.